Hey guys, what is up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla stock, let's go over the market, let's go over what is happening with the stock, what we can expect moving forward on what was so far roughly, played out roughly kind of how I mentioned on Friday, right, with that potential liquidity trap. Obviously, I wouldn't say it's bearish or anything just yet, in short term at least. But regardless, let's just jump into it. I'll give you my thoughts, posts, etc., updates, blah, blah, blah. So as usual, if you enjoyed, please don't forget to hit that like button. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. That link is down below where I share my intraday thoughts, post updates, technical analysis, etc. on mainly Tesla, but sometimes other stocks as well. Lately, Google and AMD have been ones I've been sharing pretty often, honestly. Or for $5 a month, you get access to all of that, plus NVIDIA daily updates as well. This morning, I was telling my members how it just, is it really that simple for Tesla to break above 271 and rocket to 280 or maybe even higher? Because like everyone's watching it, right? And this is exactly what I was saying on Friday as well, right? So let's go over everything. So let's go over that 271 level first, right? First let's get out of the way. Why is 271 important, right? Why is that level just constantly mentioned? Why am I always mentioning that level? Because that was pretty much the high of this candle back here, which was that 52-week high, I believe, that we set, all the way back in early July. And the recent time that we came up to this 260s-ish area, we couldn't breach that. Today, we actually did breach it. We did breach that level. But, and this is what I mentioned on Friday, right? Remember how on Friday I said how everyone, their mother, their cat, their dog, literally everybody's watching for that 271 level because everyone is thinking, hey, oh no, it went above 271. Looks like I should close my puts or shorts. Looks like I should go long. Everyone was thinking that. Everyone was eyeballing that. It was just too obvious. Like, it was too obvious. Like, it's too obvious. That's all I can say. It was just way too obvious. Like, what move wasn't too obvious? This one that they did right here. This with that gap up on earnings, that wasn't too obvious. This was a good one. Depending on how you look at it, I don't think it was too obvious. Personally, this one, too obvious, right? Everyone was looking for that level. So what did we do? We actually went above it. We definitely, absolutely went above it. We actually even closed 15 and 1 hour candles above 271. But what instead we did is we had issues pushing up much further, and we pretty much just very aggressively sold off the rest of the day with very aggressive red candles on slightly elevated volume, right? So that's not a good sign, right? That's not what you want to be seeing. So the question I'm sure a lot of people are asking is, well, okay, fine, whatever. You called it liquidity trap. Congratulations. But what now, right? What now? What happens next? Like, is Tesla now bearish, or is it still good to go? Excuse me. But that's what I'm going to be kind of explaining here. So the way I look at it is honestly pretty simple. So strictly from a horizontal support resistance type level, the way I look at it is if Tesla pretty much loses the very low 260. So honestly, if it really just drops below 260, to make it simple, that would be bad. I would think that the correction will begin. I do think Tesla will correct at some point. I believe it will correct. I do think it will make its way back down. It is extremely overbought on almost every single metric you possibly can look at. RSI overbought. Maybe not every single metric. The stochastic didn't even have time to catch up because it just pretty much gapped right back up. But the thing is that stochastic doesn't have to be overbought in this situation, because even if Tesla does correct back down, right? Let's say it comes back down to, I don't know, even the 230s, let's say. What all that will do, in my opinion, at least for the RSI, not the RSI, the stochastic, is it's just going to be a beautiful bullish retest where we cross to the bullish side, and all it's going to come down to is the green will most likely just come back to the red to retest that, and I think we'll continue upwards after that regardless, right? So that's why, if you look at the bands, for instance, we pretty much top ticked almost to perfection the red line, the very, very top of the band, right? Like that right there at the top of the day, if you longed that, you pretty much just longed probably one of the most extreme levels of being overbought you can be for this indicator. Congratulations, right? So that's what you want to be watching out for. Now, again, like I said, if we lose 260 to 263 roughly, which we're pretty much at right now post-market and even at the close, I think that's where, I think the bearish thesis will really start to, get a bit more momentum, right? I wouldn't say Tesla's bearish off of this close just yet. But it's definitely showing signs like it wants to, but it's not there just yet, right? So again, losing that 260, really to make it simple, I think we'll make that correction begin. And I think the levels below to watch out for if we do lose 260, with the first one being about 250, followed by about the mid to low 240s. And then my ultimate main level that I'll be looking for, the level I personally would get interested again as a trade to get into, would be back in the 230s. Why the 230s? Well, it's very simple. You take the Fibonacci retracement, you go from the swing high to the swing low. And then what do we have? Again, assuming this is the swing high, of course. Well, for now, we're assuming that today's top is the swing high. The Fibonacci retracement level brings us the 618 level down to about the 335. Can't even speak. 235 level, right? That's the level that I'll be personally eyeballing right now. And I think that's going to be the Probably one of the best levels to go long if it gets there. Ideally, the quicker the better, honestly. But that's going to be the level I will personally really start getting interested again, and I would be very, very interested as a buyer once again. So that's what I'll be looking for personally, right? As I remove this indicator here really quickly, right? So that's gonna be the main thing I'll be eyeballing. But again, as long as we're still above 260, I honestly still think Tesla, technically speaking, actually still has potential to run back up, right? Tesla likes to be annoying. Whenever it has these rallies, it likes to be very obnoxious, right? It tends to not make the most obvious move, the most probable move. Right now, the most obvious move off of this candle close seems just more downside. Maybe that is what we get. That is absolutely a possibility. But in my opinion, losing 260 and even closing a daily candle below 260 would probably, would give that bearish thesis a bit more momentum. Like I said, ultimately back down to my major main level that I'm eyeballing it, 235 roughly. So watch for that, right? Again, 250 being intermediate support, followed by about the mid-ish 240s as well. So that's going to be the main thing I'll be looking at moving forward. Now, if Tesla doesn't lose 260 to 263, let's say we don't lose it, let's say we hold it, let's say we get a bounce from it. That to me tells me the fact that, yeah, you know what? There actually is still some steam left in the engine for it to make its way back up to the top of this channel and honestly make its way back closer to 280. That is what that tells me. So very, very important. Like this 260 to 263 level to me personally is probably the most important level. Just for that short-term trend, because again, look at it just strictly from a horizontal like resistance support level, right? You can see as I find where the damn drawing thing is back here, right? Granted, obviously we went higher, but ultimately you can see none of the candles really were able to close above this pretty much 260 to 263-ish range, right? We kept having issues. Same thing here. And today, or rather on Friday, we did, but we're also now coming back to potentially take this area that was a resistance that we had issues to now potentially turning it into a support. So that's the main thing I'm eyeballing it right now, right? If Tesla can take this level and turn it back into support, in other words, holding 260 to 263, I actually think the chances of it going back up and making its way to almost 280 roughly to the top of this channel, right? This long channel that I'm in right now, you can see, I actually think that's a possibility. I think that becomes a more realistic, probable possibility than downside. I really do. That's why this 260 to 263 level is very, very, very important to me. Do we turn this area that was resistance into potentially now support, or do we just collapse back under? That will mean that to me, this was an absolute liquidity trap. This was a very bearish liquidity trap, and this is a very bearish situation we're finding ourselves in. So just watch for that level, in my opinion. That's the level I'm eyeballing very closely for the next, for this week, really. So watch for that. Very, very crucial, very, very important, right? But again, I want to make it very clear, despite all this, despite even if Tesla moves up, the risk reward, you have to be very precise with your trades here, in my opinion, because it can get very volatile. The moves can be quick, for better or for worse, and you are buying at very elevated territory with a lot of eyeballs on the stock. So you do want to be a little bit careful. Not financial advice, just my opinion. You want to be very careful with the stock up at these elevated levels, because again, the volatility most likely will be probably on the higher end. So watch for that. Be very careful about that, in my opinion, right? But again, very overbought. Extreme overbought levels on the bands, and this RSI is extremely overbought as well. Even if I bring up the William percent range, which is essentially an RSI, also at extreme levels. And what happens every single time it gets here? Every single time it has gotten to these levels, what has happened, ladies and gentlemen? You can look at this yourself and you can tell me. I don't have to spell it out for you. You can see yourself. It's come back down the opposite way every single time. Will this time be any different? Probably not. It's just a matter of, do we get one more push up like this first or not? That's the main question, in my opinion, that you should be asking yourself. Do we get that last push up before I do think the correction begins regardless? Or do we just start it now? Another thing I want to quickly mention is this, right? So the daily candles today, right? I am a daily candle person. I like to look at daily candles and like to see patterns. And I do see a pattern today, right? The pattern that I see, or more of a structure, I guess is a better way to put it, is a potential bearish reversal structure. What is this bearish reversal structure? This is going to be a potential dark cloud cover candle pattern. A dark cloud cover candle pattern is going to be essentially where, you can see from this image right here, right? You have a nice long white candle before, you have a nice long white candle before, you have the day after where it essentially shoots back up over that range, but then ultimately essentially acts as pretty much a liquidity trap, comes back down and closes at about the halfway point or lower. And we're closing at about the halfway point of this candle, right? So if you take this candle and cut it in half, that's kind of where we're roughly closing out right now. So this is technically a bearish reversal structure. And according to this page here, you can see it is a bearish reversal 60% of the time. Nothing in the market is guaranteed. Nothing is perfect. So in my opinion, the way that this probably does execute and does, actually execute the bearish reversal pattern is, in my opinion, losing 260. If we lose 260, not only is that bearish because we lose this area that should in theory act as a support, which would be bearish if it doesn't, because that just really shows weakness in my opinion, or the bears are just very dominant, and or that'll also execute this pattern, which is, well, a reversal pattern. And we're probably going to make our way back down ultimately and overall, at the very least, in my opinion, back to the 240s. But ideally, I'll be eyeballing the 230s, 235 roughly, if this pattern executes, if this candle structure executes. So that's what I'll be looking at moving forward, right? It's really just that simple. So, do that information as you will. Let me know what you think about it down below as well. In terms of options flow, Tesla is going to be, of course, on the more bearish side for the day. If you go to options over here and we go to most bearish flow, you can see Tesla is at 12 million confirmed bearish flow. And over here, you can see, the bulls definitely overwhelmed the bears throughout the day, but this is just overall throughout the day volume as opposed to, the actual open positions, if you will. So yeah, again, I don't put too much attention on options flow. I think options flow is a supplementary personally, unless you're looking at structure and options as a magnet. But in terms of looking at strictly flow, I personally don't care unless I see something really crazy. But just looking at it in a structure-wise, just looking at the language of the chart, that's what the language of the chart tells me. In terms of upside, I don't think there's that much upside left, because I'd be pretty surprised if we go higher than 280. I'll be completely honest. Massive area of the next pivot point resistance, plus it's also the channel top. But again, there's more downside potential from here, short term at least, short term speaking, than there is upside potential, in my opinion. Because upside potential from here is going from 260, we'll say roughly, to about 280, which is $20. The downside potential is going from 260 to 235. So, there's a bit more downside potential than upside potential, in my opinion, especially with elections coming up and heating up. So we'll see. But that's what I'm eyeballing, that's what I'm seeing, and that's what I'm thinking. So let me know what you think down below. If you enjoyed this video, please don't forget to hit that like button. And as per usual, I will see you all for tomorrow's update. Peace.